CNBC TV 18 news break. So Jubilant Life has agreed to pay a royalty of 0.25% of its consolidated revenue to the founder group company. Prashant, we've been speaking about it earlier today as well. You were giving us the tentative numbers. What does it look like now? How does the match shape up?
We had reported that Jubilant Food, essentially we didn't talk about Jubilant Life, but we reported that Jubilant Food Works is in discussions to pay a royalty to the promoters, which is the Bhartiya family, the promoter group, for the use of the brand name Jubilant. And now, exchange releases coming in on the exchange announcements, essentially talking about both Jubilant Life and Jubilant Food, both companies agreeing to pay 0.25% of the consolidated revenue of the respective companies as royalty for using the name Jubilant. I'm actually quickly going to read out what what the release says. The release says that the board of directors of Jubilant Foodworks has approved the payment of a corporate brand royalty to Jubilant Enpro Private Limited, which is a promoter group company which owns the corporate brand name Jubilant. So essentially, this is a payment to the promoters via this particular company, which is fully owned by the promoters, in which the corporate brand name rests, which is Jubilant. And I quote, the royalty payment will enable the group to help protect, nurture and enhance the corporate brand name Jubilant and the group's image globally. I mean, I think this is the critical key sentence. The explanation which has been given is the royalty payment will enable the group to help protect, nurture and enhance the corporate brand name Jubilant and the group's image globally. I think the discussion is now going to turn to whether this is an explanation which really works, how well does it work with investors, shareholders, etc., etc., etc. The press release, the exchange release goes on to say it has been decided to pay 0.25% of the consolidated revenue of the company effective FY20 as royalty. So this is not effective. I mean, it was not expected to be effective this year because this year is over. But starting the year April 2019, 0.25% of the consolidated top line revenues of Jubilant Foodworks will be paid out as royalty to promoters. I mean, just to give you some numbers, if you assume, and I looked at FY18 revenues, we don't have the full year actual FY19 numbers, but if you apply the 0.25% number to the FY18 revenues, it basically works out to about 7.5 odd crores or so. 7.5 crores a year as royalty based on FY18 numbers to the promoters. So, the number may not seem very large, but I don't think it was ever about the number. It is essentially about the logic in terms of why does a Jubilant Food, which essentially does very well because they operate the Domino franchise restaurants across the country. And they pay, by the way, Jubilant Food, for example, already pays a 3.3% per annum royalty to Domino's, which they call franchise fees. I mean, that is for Jubilant Food to use the Domino's brand name. So the question is, that is justified because there's that use, and other companies, we see that with other companies as well. But the question is, why do these companies, Jubilant Food in particular, need to pay a royalty for them to use the Jubilant, and what does the Jubilant brand name really do? And that's where the explanation really would come in. And the explanation, according to the company, is that the royalty payment will enable the group to protect, nurture and enhance the corporate brand name Jubilant and the group's image globally. So that's essentially their explanation. So we reported this exclusive earlier in the day, earlier in the afternoon. The stock saw a big tumble after that. It did recover towards the close, but I think it's now confirmed. And the CNBC TV an exclusive, being confirmed in a couple of hours, actually. Let's get some reactions going. Mr. Jain Gupta, former executive director at SEBI, is with us. Mr. Gupta, thank you very much for joining us back. We didn't have to wait very long for confirmation, sir. We were talking to you in the afternoon when we broke that story. What do you make of it?
See, I will maintain the same position which I said earlier. It is immaterial whether it is 0.5 or 0.25. The basic question that remains is what for and how this brand got created. The Jubilant brand, Jubilant Foodworks, it was unknown brand, and ever since the Domino deal happened, it has been there in the market. So Jubilant, whatever advertisement it has done, it has been done with the money that belonged to the Jubilant Foodworks, which belonged to all the shareholders, not only the promoters. So whatever credibility or Jubilant has happened, it has happened out of the money of all the shareholders fund. The second, I would say that what value it brings to the table with the Jubilant name or any other name is not known, because none of us would go to eat pizza because it is Jubilant pizza. It is Domino pizza, that's why we all go. So unless until there is an explanation that what it brings to me on the table. Now, the argument that it will create a global image, the global image will not have materially impact Jubilant Foodworks, because everybody will continue to eat pizza based on it is Domino pizza, not because it is Domino Jubilant pizza, because Jubilant is not doing any addition or deletion to the Domino credibility. So I would still say that this is a pure attempt by the promoters to
Mr. Gupta, just to play the okay, let's just get a couple of things out of the way. Would this require minority shareholders to sign off, to say yes? The majority of the minority shareholders to say yes to this, for this to take effect, because this is being proposed to take effect from FY20, this year starting April.
Yeah, I would say that as per the SEBI and MCA rule, this related party proposal have to come to shareholder if they are not in ordinary course of business. Now, it is depending upon what is the policy of the company to define ordinary course of business. But in my opinion, this is not an ordinary course of business, because it is something which is radical and is new, and it is a cost to the shareholder at the cost of promoter.
Correct. So the only thing is, if I can read the relevant section, the relevant rule on this to you, sir. The SEBI rule says, and I quote, a transaction with a related party shall be considered material if the transaction or transactions to be entered into individually or taken together with previous transactions during a financial year exceeds 10% of the annual consolidated turnover of the listed entity, as per the last audited financial statements of the listed entity, which is clearly not the case here, right? So would this... That
is what I'm saying. The issue is that, but those transactions have to be in ordinary course of business. It is to be defined whether it is the ordinary course of business or not. In my opinion, I would not, as a corporate governance practitioner, I would not like to see this as an ordinary course of business, because you don't do it every day. But company may choose. So then it will be in the ball of SEBI, it will be the ball in the court of SEBI to determine whether it is ordinary course or not. But ideally, I would say this again is a promoter trying to extract premium. And mind you, the promoter should see that one statement of theirs caused almost 800 crore market cap loss to the company and shareholders. Now, any such attempt by any promoter should be, I think, should be discouraged, and the board itself should say no, because this value loss is not only for the other shareholders, it is for the promoter as well. And you have seen the same thing happening in Vedanta, same thing is happening here, and same thing is happening G and all other places. So a time has come where promoters have to really think that any statement from them, any act on their behalf, or any transaction that they do will be closely watched by the investors, and the consequences of which have to be faced by them.
Absolutely.
The time has gone. Time has gone where you can bury this issue under the carpet and enjoy life.
I mean, to the best of my knowledge, I think we'll see the stock reacting once again. Not very pleased with this announcement. We saw the stock reacting pretty violently on the downside. At one point, intraday, the stock was down about 13%. It recovered, ended down 7%. But with this now being confirmed, I wonder what happens tomorrow when we open up for trading. Amit Tandon of IIAS is also with us. Amit, we were talking earlier in the day. As I was telling Mr. Jain Gupta, we didn't have to wait very long for the confirmation. Your first quick thoughts.
Look, I want to make a more general comment in terms of some of what we've seen, whether it's the Sun TV or whether it is this or it's Vedanta, which is the fact that we find that in all these cases, the independent directors are very weak. And it's the markets which are giving the pushback rather than the directors themselves who are supposed to be asking some difficult questions to the promoters in terms of what are they doing, why are they doing it, what do they expect will happen, what is the impact on the company. And that is the unfortunate bit, because I think directors themselves are not clear in terms of what their roles are, what their responsibilities are. And in this day and age when, the expectations from independent directors are running very high, they seem to be just brushing away all this under the carpet and saying that some of these issues will take care of their own. Investors don't need to react in this manner, and you shouldn't have such volatility in the market if independent directors were a little bit more vigilant with regard to what is the investors' expectations are. Which brings me to the second point, which is that investors' expectations have changed very dramatically over the last 2 to 3 years.
Absolutely.
I remember some time back when Havells had a similar resolution, and they said, look, we're going to extend, going to do it, but it's only going to be for 3 years now. Investors were quite happy. And they didn't say that, look, we need an end to this today itself, but they said, look, promoters are going to give this up after 3 years, which is a good thing. Compare it to what has happened today and the reaction you saw in the market on this today. So those investor expectations have changed very dramatically. I don't think the promoters, or more than the promoters, even the independent directors, have come to realize that the environment around them has changed, and they shouldn't be accepting just anything which is proposed to them, saying that, look, here are the promoters, they have skin in the game, and therefore they know what is best for the company.
Just a quick question, Amit and Mr. Gupta, to both of you, very briefly. At least in the case of Jubilant Foodworks, the promoters, just to take the opposite side, they don't draw a salary. I mean, given that information, does 0.25% of sales, I mean, does it seem excessive when you put that information out as well? I mean, is it equally bad?
Prashant, I think there is a CEO for the company.
Yeah.
And they do get they are getting compensated from Jubilant Life. So, and we need to recognize they're two different businesses. So my view is that, look, then take a salary. There is nothing which prevents them from taking a salary, but a salary from one company rather than two.
Absolutely. And in a sentence, according to you, would this be material enough to warrant a shareholder vote?
I think the right thing is to bring it to shareholders to vote.
But they don't need to do it, right, according to rules?
Well, again, I have a different view. It kind of says, is it in the normal course of business? It's a one-off, so therefore it's not something which you don't keep bringing royalty proposals to shareholders, so therefore it's a one-off. It should be brought, and certainly you could turn around and say it's arm's length and justify it, but the right thing to do at this stage is bring it to shareholders to vote.
Okay, perfect. Gentlemen, Mr. Gupta and Amit, thanks very much, both of you, for joining us with perspective on this important news development. So that is Jubilant Foodworks. We reported a couple hours back that the company, Jubilant Food, is going to consider paying a royalty to the promoters. And now, this evening, the announcement to the exchanges confirming that very thing. And of course, there is also Jubilant Life, another group company, which is going to also pay a similar royalty to the promoters. That's Jubilant Food, and of course we'll continue to see the reaction, and we'll follow this up tomorrow morning with more. It's a wrap here on this edition of Reporter's Diary. Thank you very much for staying with us. Stay tuned, there's more coming up on the other side.